But welcome everyone to this opening panel with the leadership of the finance family, the National Treasury Director General Duncan Pieterse, who is in fact my boss. I got promoted to the Accountant General's office, but I'm in fact in the Director General's office, and Johnson Makhubu, who is the new Commissioner of SARS, quite new, and a particular welcome to you, Johnstone, because you took over at the helm of SARS only on the 1st of May, so this, I expect, is your first public economics conference.
Sure.
I hope it will be the first of many.
Thank you.
The conference, as you know, is designed to take us from evidence to policy to address youth unemployment, and the focus of this first day is on the data, what it reveals, what it tells us, what it doesn't tell us. And there can be no better way to start the day than with these two institutions, which sit on some of the richest data sets in the country. So in this session, we ask first, what is that data and how is it managed? And then we look at the role of data and research, on the one hand, in economic policy making and evidence and solutions to do with jobs and youth unemployment, and on the other hand, at how data is used within these two institutions to make them more efficient and more effective. The Commissioner has asked that we start with the video about SARS, for I think all the potential taxpayers out there, which you postgraduate and undergraduate students are. So if we could start with a commercial break, and then we'll get straight into it. Yes?
Greetings everyone, at the GTAC Public Economic Conference 2026. I am Pulse, the SARS internal AI assistant, enabling more than 14,500 members of Team SARS. Across SARS, I help colleagues work faster with trusted information, research support, and practical digital assistance. Today, I want to share one practical example of how SARS uses extensive big data to improve tax administration. A strong example is SARS auto assessment. Before filing season begins, SARS receives data from employers, banks, medical schemes, retirement funds, and other third-party providers. SARS then data mines, validates, matches, and analyzes this data to identify taxpayers whose information is complete enough for an automatic assessment. Where the information is reliable, SARS calculates the assessment and notifies the taxpayer digitally of their assessment outcome. If the taxpayer agrees, there is nothing more to do. And if they want to update the assessment, they can use e-filing or the SARS Mobi app. This is data working for the public good. SARS processes more than 320 million third-party records to reduce effort for taxpayers, improve accuracy, speed up refunds, and focus attention on cases that need review. In the 2025 filing season, SARS processed 5.8 million auto assessments, with 12 billion rand in refunds paid within 72 hours. That's money back into the economy faster, supporting household spending and growing our SA economy. This shows how trusted data, digital platforms, analytics, and AI can help government deliver better service, strengthen compliance, and build public trust. It is now my privilege to introduce the SARS Commissioner, who will share more about SARS' increased and expanded use of data.
Thank you.
Thank you to the bot. But I'm in fact going to start with Duncan, if I may. And I'm hoping to leave some time for questions at the end from inside and online. But Duncan, let's start by talking about the data. What is it? What are those data sets, or some of them, that you have within the National Treasury, and how are they managed? And what light do they throw on issues of the economy and job creation?
Thank you, Hilary. Good morning, everyone. It's lovely to be here. You know, when I joined the Treasury in 2013, I joined in the Economic Policy Division, and one of the first projects I got to work on was a project to establish a data lab and to bring in different data sets that we can use for research and policy making. And at that stage, the first partner we had was actually SARS, and we worked in the early years quite closely with Johnstone with the Commission in his previous role. And we started looking at what value there is in the administrative data that we collect, especially the tax data, for research purposes. Now, admin data is data that we collect in our normal course of doing business as government. We don't collect it for research, we collect it because it's part of our administrative function. But over time, governments have realized that there's actually a lot of value in there. So in the case of the tax records, we have individual tax data of individual taxpayers. We have firm-level data from firms through their company income tax records, their VAT records, and so on. And those data sets have been anonymized and cleaned and have been transformed into panel data sets that we can use in order to get insights about policy making, about the economy. Your second question, you asked, well, what insights can we glean from those data sets? So you can imagine you are able to get a picture of individual taxpayers, their characteristics, their incomes, and so on, as I said, fully anonymized over time, as well as companies. So on the firm side, you are able to assess things like firm level productivity and how that changes over time and what the interactions are between the productivity of firms and the employees who work at those firms, because you also have individual level data. You can also assess what are the impacts of policy changes or tax incentives on the behavior of firms to inform better policy making. I think it was Andiswa made the point about if you don't have the right kind of data, you can't produce the right evidence to inform policy making. So the insights are very rich, they're very varied, they are accessible to researchers, the data that is, and it forms the basis for a lot of the policy work that we do.
Commissioner, can I turn to you from the tax admin side? How do you manage that data, but also how do you use it within SARS to make SARS work better, as it were?
Thank you. I think Duncan, DG, spared us the pains of early days in terms of how this data ultimately gets into the lab at National Treasury. I just thought I would touch on that because it's very important that the information that moves from tax administration through to the Treasury does so in a very secure manner. In the olden days, we used to run around with disks and memory sticks to transfer the data, and increasingly today, we've got safe transfer protocols that we use for files, and it's almost seamless via secure channels to ensure that the data that comes through is going through a channel that is secure. So whoever then gets to use that data on the other end gets it as frequent as they ought to get it. But I think what is important also is to ensure that before the data is transferred, there's a lot of scraping that must take place, because the reliability of the data that ends up at the data center, data lab, is very important to drive the research that then happens and the policy decisions that get made. For us, within the tax administration, this data is also very useful. Of course, we don't anonymize it because we need to enforce. The data helps us to be able to pick up areas of non-compliance, so compliance gaps at firm level, at individual level, across product lines. And we are able, for instance, to be able to pick up by enriching the data with other third-party data sources. Earlier on, it was mentioned that we get 320 million data records from the other third parties to enrich the data. That allows, as I say, primarily for us to deal with non-compliance in the system and drive the ethos of voluntary compliance. And increasingly, when tax-paying citizens know that the tax administration has got access to all types of data, it assists with driving compliance. Let me also add that it helps us to assess whether the policy decisions that we have taken are truly manifesting on the ground in terms of either domestic resource mobilization, enhancing the revenues, and or if it's incentives, that it is driving the right behavior. So we are able to come back to our colleagues in Treasury, tax policy, to say the data that we see on the ground is not driving the policy interventions or intentions that we wanted to see. We are looking, for instance, at such things as SDL, skills development levy as it comes in, and we want to understand whether the intentions that were intended through that product are being fulfilled through the likes of job creation, incentive tax, employee tax incentive. We look at that with real data to say, is it being abused? Is it meeting the intention that it was intended for? So data for us is the lifeblood of the tax administration. Without data, we cannot be able to drive many of the programs that we do.
Duncan, let me run with this. How do you in the National Treasury use data? Can you give us a couple of examples of spending and revenue decisions and efficiencies which have been driven by data?
Yeah, so perhaps let me use two examples building on the point that the Commissioner has just made. In 2017, we made a decision to increase the personal income tax rate of the top bracket from 41% to 45%. We were then able, subsequent to that decision, to use the data that we have in the lab to assess whether that decision actually met our policy goals, in particular in terms of the revenue that we were trying to create. And what we realized was that actually that decision to increase the marginal top rate from 41 to 45% actually resulted in a lot less revenue than the fiscal authority, than the National Treasury expected. And that is because at those income levels, those individuals are able to change their behavior, adjust what they do in order to pay less tax. And that gives us insights into the kinds of changes that can and won't be effective when you are targeting certain groups of taxpayers. And without the data, that kind of assessment would not be possible, and that was one of the first research papers that came out of the data lab. Beyond the data lab, of course, there are other data sets that we sit on as well. I'll just give one example of a data set called Pieterse, which is the payroll data that we have. And we believe that there's a lot of potential both to modernize that system and also to use it more effectively. We are using the Pieterse data now to do a national audit of ghost workers. So we go through the Pieterse data and we flag high-risk cases. So these are government employees that are getting anomalous Pieterse payments into their accounts, multiple IDs that are linked to a single payment, or cases where we cannot verify these government employees properly in the National Population Register, which sits with the Department of Home Affairs. Once we've identified those high-risk cases, we are now going through a biometric verification exercise, where each government employee that's been flagged as high risk goes onto a link, verifies their biometric credentials, and then on the basis of verified biometric credentials and additional information that we collect, we can establish whether this government employee is in fact a genuine employee or is in fact a ghost worker. So the power of data, I think, is quite important. What's left for us to do now is to modernize the Pieterse system, which is the process we are currently undertaking. And we are ending the first year of a multi-year modernization process of that system so that we can do ghost worker audits in real time, all the time, as opposed to this manual process that relies on people having to verify biometric credentials online.
Let me stay with you for a minute, Duncan, and talk about what are the innovations and reforms, or some of them, that you're looking at to enhance fiscal sustainability?
Well, let me maybe stick to the spending side. I spoke about the modernization of PEC. I think one of the big reforms over the next few years is the modernization of our data systems in order to allow us to do the kind of public finance verification, assessments of efficiency of spending and so on. And that's work that's underway, not just in PEC, but in some of the other systems that we run. So that's the one area of issues. We are also introducing new systems. So the Chief Data Analytics Officer at the National Treasury, Dr. Ayanda Shlatwayo, is doing a project called the Mzansi Exchange, which is a data exchange that will allow government departments to share information with each other. So you've got the National Population Register that sits with Home Affairs, you've got tax data that sits with SARS, you've got procurement data that sits with the National Treasury, but we don't have a single interface by which we can exchange information and verify information. And the data exchange will allow us, for example, to see, are government employees doing business with the state? Are social grant beneficiaries are they registered, for example, as also being in employment or paying UIF? And being able to cross-check those data sets will really enhance our public finance function and make sure that the scarce resources that we are spending are actually being spent effectively and efficiently. There are some other reforms that we're working on, but I'm sure we'll get into some of those in the Q&A.
Commissioner, coming back to you, some examples of how you've used data-driven research to enhance your own operations, but also bring it back to our theme. I mean, why does that matter for the economy or for job creation?
Sure. So I think in general, we think that the biggest reform within tax administration thinking, and this is validated by conversations 2 weeks ago that I had with our colleagues globally at the FTA of the OECD, is about how do we drive domestic resource mobilization as a core theme. Because if we're going to deal with issues of youth unemployment, we need to ensure that there is self-sustenance that is created through enhanced resource mobilization domestically. And therefore, from a tax administration point of view, we are looking at outputs of research to say, what do we do better to make sure that we mobilize resources much better? Give an example, we're just working with the Treasury now to start to deal with entities that are doing business with the state, but are sitting in my debtors list on an ongoing basis. We've got about 44 billion rands that we are owed by people that are doing business with the state. And the Treasury has been kind enough to say on a weekly basis, we will trigger you to know who we're paying. And increasingly, that information will feed into the data lab to say, how do we change behavior when we exchange this information? Do we increase voluntary compliance, or do we trigger other forms of non-compliance or changes that are adverse to the fiscal framework? So just one piece of work that we've been able to do to say the payment side of the expenditure leg of the framework feeding into the tax part seamlessly is starting to drive behavior that allows us to pick up, one, those that should be VAT registered, for instance, that are not, but also to start to say, are you declaring in your VAT 201s, in your VAT returns, at the level that you should? And increasingly then, we may come to a point of saying, is the position we should be taking from a policy point of view that of withholding some of the VAT outputs, and at what point? Because we've seen in other geographies and jurisdictions that there's a position that they've taken, but we need the evidence from some of the work that we're doing currently, just in exchanging data to say, does it change behavior? Is issues of withholding or split payments on the output side of the VAT equation going to be enough to drive compliance so that the vehicles, the Range Rovers, are not bought with money that is supposed to come back into the fiscal framework? So these are some of the, especially by those that do business with the state. So these are some of the reforms that can only be enabled by exchange of data, by visibility of what's happening on the expenditure side and the tax side, and pulling that together to be able then to drive better domestic resource mobilization. We are going to soon be starting to get exchange of information from the crypto asset perspective. And again, that will help us because we know that once that data is available, it will help us to understand what policy positions should we be taking to counter illicit financial flows that are currently being perpetuated through the use of digital assets, including crypto assets. So these are things that from our side will help us to prevent leakages in the fiscal framework from a tax point of view, but also will assist us to ensure that we augment what we are able to collect from the activities that are happening in the economy, thereby deal with such concepts as the tax gap that we are grappling with within the tax administration.
Your predecessor, Commissioner, spoke of an 800 billion of unpaid taxes, some of which is that tax gap, the gap between what is legally owed and what is actually collected. Can you narrow that gap?
Look, I think we can. I mean, I choose to deal with 400 billion odd that we have demonstrated through top-down economic modeling in terms of the tax gap. The other portion is just our balance sheet that we are not able to collect in terms of debts that are owed. But let's talk about the 400 billion odd. In there, I think the work we've done with the IMF tells us that we've got about 198 billion rands that is due to VAT, so the VAT tax gap. When we talk about such issues as e-invoicing, e-reporting, as a reform that we may want to, over time, tap into as we modernize VAT, it is evidence elsewhere that by modernizing your VAT system and introducing such concepts as e-reporting and e-invoicing, you are able to create visibility at the point of sale to then narrow down what that gap becomes. I think in my tenure, I'm much more focused on how do we accelerate VAT modernization, because that's where, in my assessment, the biggest gap sits. And again, if we're going to dent and speak to the issue of domestic resource mobilization, we need to close that gap. I believe we can. The second gap that I'm concerned about is a gap due to accessible products. And I think we can, again, leverage technology as far as track and trace technologies that we can introduce into the ecosystem. Speaking to others like the HMRC, we know that it is possible to close the accessible products gap by leveraging technology such as track and trace in a systemic approach. So I think the tax gap issue is going to take us some time. We have seen that it's not something that you can close over a year, but you need to start. You need to start the work in a structured way that is based on evidence, and that's why we are looking to SA Tide and Uniwider and the work that we are doing with the Treasury to ensure that our stance on how we close the tax gap, first how we quantify it, and therefore how we close it, is evidence-based. Because we can't just pull numbers in the air. The numbers must be based on hardcore research that we have done that gives us the evidence of where we need to focus first within an environment where we've got very limited resources. So the smart use of resources is going to be based on the evidence that we've been able to collect. And the Data Lab is starting to assist us to start to think about quantification of the tax gap, but also what interventions do we then put in place to close the tax gap.
So from resource mobilization to what we do with those resources, and Duncan, let me bring the conversation now back to issues of growth and employment. How do you balance the need for growth and employment with the need for sustainable public finances? And how do you make those decisions? How do you make decisions about allocations, given the data that you have?
Yeah, so look, I think the evidence tells us that an economy that grows is an economy that creates jobs. We saw that in the mid-2000s when we were growing at over 5%, and we were creating jobs that not only absorbed everyone that was coming into the labor market, but we created jobs above what was actually required at the time. And I'm sure Haroon will speak a little bit about that. So an economy that grows is an economy that creates jobs. And our challenge has been that our growth of our economy has been for many years now less than our population growth. And so on a per capita basis, the income that is shared between South Africans has become smaller and smaller. And so from our point of view, we see sustainable public finances as being the major necessary condition for growth. It's not the only thing that will get an economy to grow, but without stable, sustainable public finances, your chances of growing are going to be very, very difficult. And that's because it's very difficult for businesses to invest in an environment where the government is not managing its own finances sustainably. They don't know whether that government's going to increase taxes. They don't know whether the debt is sustainable. And so the long-term decisions that you need to make in order to invest in a country are very difficult to make when public finances are not managed effectively. And so over the last few years, our focus has been on how do we turn the corner, as it were, in terms of the management of public finances. And our main objective has been to make sure that our revenue, supported by the administrative gains by SARS, is greater than our non-interest expenditure. And that's something called a primary balance. And if revenue is greater than non-interest expenditure, you have a primary surplus. We have had a primary surplus for the last 3 years. And the last time before that the government had a primary surplus was in 2008, 2009. So that tells you for how long we've been struggling to get public finances back into shape. Now, once you have a sustainable system of public finances, the question then becomes, well, how do you grow the economy? Now that you've created the environment for businesses to invest and to take risk, how do you grow the economy? And from our perspective, there are two main levers here, which again, I'm sure we'll get into the discussion. The one is investment in infrastructure. We have a massive infrastructure deficit in our country, whether it's our transmission infrastructure, our port infrastructure, our rail infrastructure, commuter rail, signaling requirements and rolling stock, our infrastructure for water reticulation, electricity distribution. There's a massive investment requirement that is needed there, and we have to think about ways to unlock that. And we can talk later about the different steps that the government's currently taking to make sure that we can do that. The other part of it is about what we've called structural reforms, which we are driving through Operation Vulindlela, which is about how do you remove the binding constraints on growth in an economy. An economy can't grow without cheap and reliable electricity. So one of the major structural reforms that we're undertaking at the moment is a reform of the electricity market, the unbundling of the state-owned monopoly, creating competition in that space so that you have private businesses who can co-invest with government and bring electricity prices down over time to the benefit of consumers and businesses. And there are a range of other structural reforms that we are undertaking. So in our view, the basic condition for higher growth and therefore higher employment is the sustainable management of public finances. And beyond that, the implementation of structural reforms and a ruthless focus on infrastructure as a driver of growth will get us well beyond the 1% where we are currently stuck to the 3 to 5% where we need to be.
I'm going to ask each of you one last quick question before we open to questions from the audience. You have 70 students here in the room and a few hundred more online. If there was a research topic, if there was one research topic you wanted them to tackle, what would it be?
Well, I'm not sure I can give them a research topic, but what I will say is this. If you go on the SA Tide website, which is a partnership between Treasury, SARS, and UNU wider, you will find access there to all of the data sets that are housed in the data lab at the National Treasury, and you'll have access to some of the research that's come out of this program over the last number of years. And that will give them at least a sense of the data that's available and some of the interesting questions that's been answered and asked over the years that'll hopefully give them a sense of the kinds of issues that they could look into. I should also say that we've just opened the National Treasury's bursary window, and we also allow external students to apply for bursaries at the National Treasury. The window opened on the 1st of July. So those of you who are looking for bursary support for your postgraduate studies, please have a look at that and we will encourage you to apply.
Commissioner,
Yeah, maybe.
these students,
Sure.
one project you'd love them to do.
The taxman always wants more, so let me give two. I think I agree with Duncan in terms of going into the base. I think for the theme we are trying to deal with, I'd be very keen to understand from a research point of view, if we collect in excess of 25 billion rands in skills development levy, how is it driving down youth unemployment through better skilling? Because again, there's a skills mismatch somewhere. Technical skills are not available at the rate that the economy may be looking for. So what is this 25 billion rands buying us if 80% of it goes to cities and 20% goes into the National Skills Fund? Important area. I think out of self-interest, I would suggest that some people here may want to look into that. Secondly, I'm kept awake at night by the informal economy. And to unpack the nuances in terms of contribution of the informal economy into the tax system, for me, would be another area that is important. Thank you.
Great, thanks very much. I'm going to go first to Vusi, who has taken for a couple of online questions. Are you ready with them, Vusi, or shall I go to the floor?
Thank you, Hilary. Look, there's one question that is specific to Dr. Duncan, and Anonymous asks whether Dr. Pieterse can please provide some examples where we had jobless growth in some of the economic industries in South Africa.
I think what I'll do is I'll take 2-3 questions, and then we can each pick up on them, if that works. Could I have a quick show of hands from the floor? I have someone, I have many hands. And I think the person with the microphone is probably going to do some of the allocation decisions here.
Thank you so much.
And then we'll come forward to this lady in the front with the glasses.
Do I need to introduce myself first?
Please introduce yourself when you're where you're from.
It's Marius from University of the Western Cape. And my question is directed to Dr. Duncan. He mentioned the decision that was taken to increase the percentage from 41% to 45% of the tax for the upper bracket, and that it led to the behavioral change and in a negative way. So my question is how easy it is to reverse that decision, or what would inform the decision to perhaps redirect that policy, or to change how you implemented that policy to ensure that that behavioral change is dealt with? Thank you.
Could we bring the mic forward at this table over here? The lady with glasses. Please introduce yourself.
Morning, my name is Zanele Jauke from the South African Reserve Bank. I have 4 questions.
Oh, please, could you choose just one? Thanks.
I can choose 2 cause one each.
Okay.
At the beginning, we saw, his name is Pulse, the robot. Yeah, Pulse was talking about a couple of things, but what stood out for me is the auto-assessment talking about completeness of data, accuracy. So my question is, how, when you say, when we talk of accuracy, what informs accuracy in SARS? When you say data is complete, what informs that completeness in SARS data, and how accurate is the auto-assessment process? And then, oh, these are interesting questions.
I'm going to give someone else a chance.
No, the other one is to the...
There's another hand at your, sorry. Just because we really are running out of time, and I don't want to derail the conference right at the beginning.
On the administrative data set, can we have a unique identifier that allows us to map businesses across from, say, IPC, Reserve Bank, National Treasury status A? It's difficult to consolidate data and identify these companies. Can we consider a unique identifier for companies specifically?
Okay. And let me come over to this side of, I'm going to go somewhere, yeah, okay. Over here.
Thank you so much. Firstly, thank you to the panelists for an interesting discussion. I'm Bonani from Nelson Mandela University. I would just like to find out from the DG what I want to know is what strides is National Treasury making to institutionalize and operationalize fiscal rules? And to the Commissioner, what strides is SARS making to collect data from the informal economy, which they can then translate into evidence and then policy making? That's all. Thank you.
Vusi, anything quick? One maybe
One
from
more
online?
from online, again, anonymous. I'm getting worried about the anonymous. Would like to know you also online, what your name is, maybe the institution. But anyway, Hilary, the question again to Dr. Duncan is, does manufacturing industry have the potential to grow at 3% plus in future and contribute to job creation? Does manufacturing industry have any potential to grow at 3% plus in the future and contribute to job creation?
DG, if you can tackle quite
Okay.
a range of questions there, and
Yes.
then we'll give you the last word after.
Okay, let me start, and I'll do them in reverse order. When you get a question from someone who's anonymous, you always get a little bit concerned. But these are fair and I think good questions. So let me start with the last one. And I would suggest, I see Professor Borat has joined us now. You should pick his brain on this as well, because he's someone that has thought about this question of manufacturing and its potential contribution to growth quite a bit, as well as this issue of jobless growth. But let me make this point. Our manufacturing sector in South Africa is dominated by 4 major sectors: automotives, petrochemicals, food and beverages, and there's a 4th one which Arun will remind me of. And those are the 4 sectors that dominate our manufacturing sector. And the realities are that all of those sectors are increasingly becoming less and less labor intensive. So if you look at the research of people like Professor Roderick at Harvard and others, they will tell you, they argue at least, that manufacturing, because of China's dominance and because of the role of technology in creating lower and lower employment intensity in manufacturing, it doesn't offer the kind of job-rich growth opportunities for countries like South Africa that it may have 10, 15, 20 years ago. There are certainly sectors, moving now to the first question about jobless growth or job-rich growth. There are certainly sectors in South Africa where we know the employment intensity of those sectors are very high and they offer opportunities for job-rich growth. And some of these sectors are sectors where we have a natural advantage. Tourism is an obvious example of this. Many of the services sectors are still quite employment intensive. The construction sector has one of the highest employment multipliers and so on. So part of the question, the sort of industrial policy, economic policy question for South Africa, and for you to ask Professor Borat later, is how should we calibrate our industrial and our economic policy in order to take advantage of those opportunities for job-rich growth that we still have in this country. On fiscal rules, we made a commitment to announce the outcome of our technical work on fiscal anchors at the time of the MTBPS in October. We've published our technical paper. You can find it on our website. We're going through a public consultation process, and we will announce the outcomes of that. And our view is that a fiscal anchor is going to be very important to embed the turnaround in the sustainability of public finances that we've achieved over the last few years. In terms of the unique identifier for companies, I'm sure the Commissioner can add on that. What I can say is that within the lab, you are able to track companies across different data sets. The question is, how do we then enable that across other data sets, some of which we don't have in the lab? Finally, a quick point on the 41 to 45%, and how do we reverse that decision? Now, the challenge with tax policy decisions in general is that because tax policy decisions are tied to a revenue number and the generation of revenue, when you change that tax policy decision, you have to run a few different kinds of assessments. The one is you have to say, if I change this decision, what impact will it have on the revenue outcomes for government? And you need to have a sense of how much that is, quite accurately so, because the next question then becomes, well, how do I offset that revenue loss if I think that changing this policy decision is the right thing to do? So if there's a revenue loss associated with the changing of a tax rate, for example, you then have to say, is there the opportunity to introduce a new tax measure to offset that revenue loss? Or can I decrease expenditure somewhere in the fiscal framework in order to ensure that it does not lead to imbalances in the fiscal framework? Or alternatively, if your evidence and your data tells you that changing this will actually generate a different kind of economic activity or economic outcomes that can compensate for the revenue loss, then that is something you can consider. So our tax policy team works very closely with the colleagues at SARS to run the kind of modeling and generate the evidence so that for every tax decision we make, whether it's a new decision or a reversal of a previous decision, we have a very good sense of what that means for revenue, and therefore what that means for the fiscal framework and the fiscal balances. And that then goes into a proposal to Cabinet and to Parliament for their ultimate consideration, because that's where the responsibility to pass tax laws actually lies.
Thank you. And the last word, Commissioner.
Sure. Two questions that came up. I think we are working across government with a number of other agencies to make sure that we come up with a unique digital identifier first for natural persons and progressively for juristic persons. So that work is underway, and you can be sure that it will start to filter into the public domain going forward. And I think the DG is correct in saying we can, at this stage, triangulate companies from company registration numbers to VAT and other type of identifiers. But I think the point is valid in terms of saying, can't we just have one identifier for companies, as it were? I think the informal economy and data collection, there's a number of things we are doing. Most in the informal economy utilize devices to accept payments. We are starting to get information. If you go into any market, informal market, you still, by virtue of the fact that we still have those vendors that are worried about holding cash. They have devices that they utilize for you to be able to transact. We're getting that information. It's starting to give us a sense of what's happening in that space. But the biggest problem is that the informal economy tends to work on cash in the main. So how do you tap into that? Again, the Reserve Bank is helping us with a national payment system that is aimed at two things: financial inclusion as well as reducing the cash in the system, so that we are able to get a sense. But we're also working with the Department of Small Businesses to ensure that we start to tap into the informal economy as we move forward. Auto assessment, the data is as accurate as the source that gives it, and therefore we rank sources of data. There are data sets that we only pre-populate but don't use for auto assessment to make sure that the data that we utilize is accurate, and the completeness of the data depends on the complexity of the subject to whom that data relates to. Therefore, we've started with simple taxpayers, and increasingly we'll move to those that are complex. We've left out those that are complex taxpayers simply because you cannot complete a full view so that you are accurate of their income and expense that accrues to them. Thank you.
Thank you very much. Thank you to both of our panelists and to the engagements from the audience. I'm sorry we couldn't take more of your questions, but you will have lots of opportunities in the next couple of days. I think we've ranged over a rich set of topics and given you some sense of the richness of the data that is available and how it is used to drive efficiencies within government and how it could be used more effectively to make good policy. Thank you very much and enjoy the rest of the conference.
Thank you so much, Hilary. Thank you,
Dr.
Pieterse, and thank you, Dr. Makhubu, for a wonderful panel and doses of information that you've shared with us. Please give them a round of applause once again.